In this video, we'll learn about the different trading sessions. Let's take a closer look at what we'll cover. The Forex market is open 24 hours a day, 5 days a week. We'll take a closer look at the times and the 3 major trading sessions. Finally, we'll take a look at the best sessions to trade. Like I mentioned, the Forex market is open 24 hours a day, 5 days a week. The market opens at 5 p.m. EST on Sunday afternoon when the Asian markets open for trading. The Forex market closes at 5 p.m. EST on Friday afternoon, and this coincides with the close of business in New York. The fact that the markets open 24 hours a day, 5 days a week, is a major draw card for a lot of traders. In comparison, the stock market is a bit restricted in the amount of time that you have available to trade. This is the reason why a lot of traders choose to trade Forex. While the market is open 24 hours a day, not all the hours are good to trade. Trading tends to work best when at least one of the countries of the currency pair you are trading is actively in their business hours. As you can see on the chart below, I've taken the example of the Euro USD. You'll notice that the bad times of the day to trade are usually quite choppy. The market tends to be a bit flat and there are no clear trends that you can identify. On the other hand, the good times to trade can easily be identified by high volume. You'll notice that the candles are a lot bigger and the market is trending nicely. In this particular case, the market's going down quite nicely during the good times. And during the bad times, you can see that the market is actually quite flat and moving sideways. On this chart, the bad times of the day to trade are actually times of the day when the European and the US markets are closed. The good times of the day to trade begin when the European markets open, and it ends when the European session closes and the New York market is left all alone. There is a little bit of movement once the European market closes, but as you can see on the right-hand side of the chart, as time goes on, the volatility seems to disappear from the market and the market starts to move sideways. Let's now take a look at 3 major trading sessions. The first major trading session is the Tokyo session. It's also known as the Asian session. The Tokyo session starts from 5 p.m. EST and runs until 4 a.m. EST. That's 12 a.m. GMT until 9 a.m. GMT. The second major trading session is the London session, also known as the Great Britain and European session. It starts from 5 p.m. EST and runs all the way through until 4 a.m. EST. In GMT time, it starts at 12 a.m. GMT and ends at 9 p.m. GMT. The third major trading session is the New York session, or the North American session. It starts at 8 a.m. EST and ends at 5 p.m. EST. In GMT time, it starts at 1 p.m. GMT and ends at 10 p.m. GMT. Now, let's take a look at the best sessions to trade. The best session to trade, undoubtedly, is the London session. This is where you have the highest volatility, or the most movement in the market. This is the best time to be trading. The market can, and often does, change direction when the New York session begins. There is an overlap between the London session and the New York session. Once London closes for the day, the remaining New York session tends to be a bit quiet. The entire Tokyo session is quiet enough that most traders avoid trading during these times. The market does, and it can move during the Tokyo session, but it tends to be limited and it can also be very choppy. The trading sessions will impact your trading, especially if you choose to trade smaller time frames. The 4-hour, the daily, and the higher time frames are not largely affected compared to the lower time frames. For instance, the 30-minute, 15, and the lower time frames. Essentially, the smaller the time frames you choose to trade, the more you're going to notice the changes between the different sessions. So if you are trading lower time frames, you need to pay closer attention to the sessions that you're trading. If you are trading higher time frames, like the 4-hour charts and higher, then there's not so much need to pay too much attention to the trading sessions. They can have an impact, but the impact tends to be a bit limited. Like I mentioned, the best time to trade is the London session. What tends to happen is that the Asian session opens first. There's nobody else to really do business with at that time. So while there is some movement and a little bit of volatility, most traders will avoid that and wait for the London session to open. As soon as the London session opens, London and Tokyo can start doing business. There's a lot more volatility in the market, and this is a really good time to trade. The Tokyo markets will close, and London will continue to do business with the rest of Europe. so it's still a good time to trade. Eventually, New York will open, and London and New York will do a lot of business, and this is a really great time to trade because there's a lot of volatility. But as soon as London closes, you'll find that the second half of the New York session tends to be a bit quieter. A lot of the volatility is removed from the market. And as New York closes, Sydney comes online. There is a little bit of business taking place, but there isn't a lot of volatility, and the cycle repeats itself. The Tokyo market will then open a few hours later, and it continues. So this is very important to pay attention to, especially if you are on the lower time frames. Knowing where you are at any given time when you are trading and knowing what session you're in can really make the difference between trading for profit or taking a loss. That's it for this video. Thank you for watching. I'll see you in the next one.